Welcome, ladies and gentlemen, to the Alkandros Capital Management Informational Podcast. I'm your host, Konstantin Kai Alkandros. So it has been a bit of time since the last podcast, so there'll be a fair amount of news to catch up on. This may be a longer podcast than previous ones. At this point, things have sort of been in somewhat of a flux the last couple of weeks. So I haven't unfortunately had the time or the energy to really sit down and do podcasts more frequently as I would have liked. So I think what I might do from now on is maybe do a once a week podcast. That will at least give me time to sort of think about and plan it ahead, rather than being pushed and sort of forced to do one every night as I initially wanted to do. So I think I'll try for once a week, or at least I'll do one as often as I can, as time allows. So unfortunately, business does pull me away, personal life does pull me away. So it's when you're juggling multiple businesses, it's hard to get the time to sit down and really kind of look at these things on the daily. So I think once a week podcast is probably going to be better to cover the subjects, and also sort of provide more time to cover things. If I do one a day, there may not be a lot of news to that's not a lot of may have changed on the markets. So I think it'd be better to maybe do one once a week and kind of have one podcast a week that's much longer than sort of say seven that are much shorter. So all right, so well, as you can tell, the markets. Many of you probably have noticed that the markets aren't really doing well. None of the markets are doing very well, although the U.S. markets seem to be sort of on the rebound. We'll cover that a little bit later. But currently, we'll focus on the Australian market, the ASX. And it's the last week, things have just continually fallen. So it's been just a constant. The snowball falling down the mountain has just continued to grow and grow. And stocks are not increasing; they are decreasing. So there's just been steady decreases across most stocks. There's only very few stocks that are doing well, and those tend to be stocks that are, related to health or food staples, things like that. So, if we look at our watch list, we like to focus on the penny stocks because that's where our trading company focuses on. You can see on this list here, there's quite a lot of downers again. So. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. About 30 stocks, so that's basically three-quarters of the market, just almost three-quarters of the market, definitely at least two-thirds of the market just falling. That's not good. Well, I mean, again, it's good if you're wanting to buy stocks up, but if you are looking to sell or hold, not good. So you can see there's a lot of panic selling. People trying to get out before the value of their stock goes down or before they lose too much money. And it's been like this basically for the last month and a half. There doesn't seem to be much. There doesn't seem to be any end in sight in the immediate future. But now that there are reports of the coronavirus starting to slow down and dissipate in China, I think we'll start to see the market probably start to turn around within the next 2 months. I've sort of been a bit more. I've sort of thought that in the last couple of weeks that it would be another month before Corona goes, but I think this disease is going to stick around for longer than I think. So I'm going to say probably maybe in 2 months' time the market will stabilize and start to see a bit of growth. But at this point, at least in the Australian stock market, we're seeing continual decline in stock prices. There's only 1, 2, 3, 4, 5, 6, 7, 8 stocks that didn't move, and only 1, 2, 3, 4 stocks that went up. So wow, that's 10% of stocks rose. In penny stocks, that is. So that shows you how bad the market's doing right now. The Australian market, at least in the penny stocks sector, is doing badly. But if the penny stocks are our window into the wider things that are happening in the stock market. So I would say regular blue chip stocks are doing the same thing. So very little to no growth at all. Very little to no growth at all in the stock market. As you can see, the graph here, this is the ASX 20, top 20. So these are the top 20 blue chip companies in the Australian stock market, and you can see from the last day, again, massive drop in valuation. Yeah, there was a bit of a rebound at around 11 o'clock here, and then it's just been a steady decline until closing. That's how it looks in the last 5 days. So decline, then sort of upwards movement, sort of a bit of a recovery there, and then these are probably speculators right here. These are probably speculators. These are probably people who bought in around this area as it was dropping, as you can see it was dropping, and then have sold out as the values have gone up. And now you can see some of them definitely big sell-off here. A bunch of people were probably bought around this kind of area, made their money, and now you can see there's this sort of a decline. It's starting to flatline now. This is how it looks in the last month. So steady decline here in the last month. And the last 6 months, as you can see, it's pretty flatlined here up until, let's see, 21st of February. And since 21st of February, just look at that drop. That's a huge drop right there. So even during the early stages of Corona, it was still kind of movement upwards. But with the travel bans, with the trade bans, there's just been a huge drop off here. It hasn't been this low in the last, let's see, wow. It hasn't been this low since December 14th, 2018. So it's hit a low. The last time it was about this low, it was, yeah, during that time. It was actually even lower than that. So that's a year and that's basically a little bit of over a year's worth of growth just wiped out in just a few weeks. So that's huge. That's the max. So that's May. Okay, so this is, yeah, so you can see this is for the last 10, 20, 14, decade and a half. We're reverting to 2018 numbers. So we've lost, what's been made in a year, it's been lost in a week. So that's quite a drop. Let's look at there's some other exchanges. You've got the NASDAQ here, NASDAQ going up here. There was a drop off last month. Last 6 months, it's lost some more of it's lost the last 6 months worth of values, just been lost. Although now it's starting to recover here, but I suspect these are probably speculators who are capitalizing on the low price here. That's last year, last 5 years. And as far back as you can go, 1980. So there you go. So the NASDAQ kind of making a little bit of a rebound here, fighting. Not sure how long it's going to last. This is the New Zealand Stock Exchange. This is this is sort of how the stocks are moving on the New Zealand Stock Exchange. The last day, sort of down, flatlining a bit. Last 5 days, you can definitely see a reduction in the price. Last month, as you can see, another more steady reduction. Last 6 months is a massive drop. So last year, so the stock exchange hasn't been this low. So New Zealand has lost, the last time it was this low, 9,800. Wow, we're looking at about this time last year. So again, the stock market has lost a year's worth of growth. It's back to where it was about this time last year. Quite significant. And max, as you can see from 2003, that's how it looks from there. And so this is the Nikkei now in Japan. Down again, down the last 5 days, down the last month, down the last 6 months, last year, last 5 years. So the last time it was at this price was back in, wow, 2016. So the Nikkei has lost. The Nikkei has lost 3 years of 3 years of value in just a week, in just a couple of weeks. So that's a massive drop, and that's how it looks like in the last few years. Mind you, it has been lower though than this. You can see sort of like around the time of the financial crisis of 2008, the GFC. So it is still much higher than it was there, which is not a bad sign. But yeah, it's a pretty low drop to lose 3 years of value in just a few weeks or month and a half. So this is the FTSE FTSE index. So currently trading, it looks like. Yep, currently trading. So this is in the UK. Last 5 days, last month, last 6 months, last year, last 5 years. So it has lost over 5 years worth of value. So the last time it was this low, you were looking at 2012. So that's huge. That's huge. It really is with the UK. UK's taking quite a hit. So NYSE, last day of trading, finished on an up, so there was confidence going up towards the end there. It's starting to make a rise here, but these could just be speculators, so this might just fall right back down as more people try to take advantage of the low price. So I think that's probably going to fall more. The last month, last 6 months, the last year, last 5 years. So it's the last time it was this low was back in December 8, 2018. It had dipped. So again, another year wiped off, and since 2003. Euronext currently trading right now as we speak. It's currently where it's sitting at. Last 5 days, last month, last 6 months. Another one with a big drop, and this one has last time it was this low. It was probably about May 2019. So less than a year's worth of value lost on the Euronext exchange the last 5 years. You can see in max. This is the Shanghai Stock Exchange in China. That's 5 days. Last month, last 6 months, last year, last 5 years, in max. So not sort of not in the worst position, really. You'd think it would have been lower. So this is probably about the time the outbreak occurred. You see the huge drop, but it's actually, if it looks like there's actually been confidence restored in the stock exchange there. So clearly they're not so worried about the coronavirus. As you can see, the markets just are not really falling. There was that initial drop, of course, there, but after about February 3rd, it looks like their index has just continually risen. You know, so it's interesting to see that compared to other places. Like Australia and New Zealand looks really bad. I think maybe because there's more paranoia in the Western countries about this disease compared to maybe in China. Maybe in China they're more sort of used to that sort of thing. They've been sort of, there's been a few pandemics that have come out of China in the last decade. So I think it's probably maybe they're more used to this sort of thing. Maybe they're not, it's because they're used to it. They've seen it before. They're sort of like they're not fazed by it, which might explain why since February 3rd, the stock market's gone up. It almost did reach the previous point before it fell back in 5th of March, but it has gone down again. But I don't think that's an indication that the market's doing poorly. I think this is just a case that speculators have come in and there's been a bit of a sell-off. So people probably who bought here probably sold off, and that's why the price is back down to here again. I think you'll see it start to climb up a little bit again. So China, things are looking pretty stable. This is Saudi Stock Exchange, so they're currently being traded now. As you can see, pretty, not much really happening. It's pretty, yes, it dropped here today. It's slowly climbed back up. Now it's slowly climbing back down. But that's not a very dynamic line. That's a pretty, it's a pretty sluggish movement on the stock exchange. Not a lot of things happening there. In the last 5 days, last month, last 6 months, last year, last 5 years. It hasn't been. So the Saudi Arabian Stock Exchange hasn't been this low since about November 2016. So that's quite a while. Again, that's 3 years of value lost in quite a short period of time. So they're clearly worried. They're not. They don't have much confidence about about the market, or about the current way the market's going. Switzerland is currently trading, so you can see big drop here, and it's kind of just slowly petering here and there. So last 5 days, last month, last 6 months, last year, huge. Look at that drop. That's just huge. Last 5 years, again, hasn't been this low since December 2018. So again, another year of value lost, and that's since 1995. So, yeah, what I see from this is basically Western. There's a lot of. I mean, look, I think there's a lot of. I think there's a lot of paranoia coming out from Western countries about coronavirus. It is just, I mean, it is it's been described, heard it described as just sort of a stronger flu. I think there is quite a bit of, I'm not sure where the fear is coming from. I think maybe it's partly coming from the media and the governments, but maybe partly just because I would probably wager maybe the way our society is nowadays. I think people were less resilient in the West than they are in the East now. So I think you can see that in the market movements. Huge drops across the Western countries, OECD countries, whereas China looks like it's quite stable. Looks like it's going back up. So these, I get the feeling they've seen this before, and they're not concerned about it. So good time to buy. You just got to pick your points. So let's look at. I would like to, because what we will do, we'll announce the upcoming dividends for this week. Now, unfortunately, I missed last week, so I'm not going to cover the ones from last week. So I'm sorry. We're not going to be covering those, but as I've said, work has kind of kept me. Has prevented me from being able to podcast. As you can see there, I'm getting a message, so it's hard to put aside time to do this. This may not be the most sort of in-depth. I'm sort of giving you just a general overview, but I'm going to probably just have to kind of keep it like that for today. So let's look at the 16th of March. Let's look at some upcoming ones. You see, it's just non-stop messages I'm getting here. All right, cool. So for tomorrow, the ex-dividend date. So you've got one more day to. Sorry, not one more day, but all right. Well, the 17th is the ex-dividend date. So that's the last day you can. That's the first day you can hold it and sell it. So you've got one more day. So you got the 18th. So on the 18th, you've got one more day to buy into these upcoming stocks that may. Now, some of these may not have a good dividend, or they may not, but this is the ex-dividend date for them, so you might want to take a look at these if you're looking to put in money in a company and get some passive income through dividends. So carsales.com, Contact Energy, Generation Development Group, Pacific Smiles Group, and Supply Network all have ex-dividend dates on the 18th of March. So that is on this Wednesday. So you have one more day to buy into this stock in order to get get yourself a dividend. The 19th of March, which is this Thursday, we have Auckland Airport, Climb Investment Management, Count Plus, Crown Resorts, Embleton, Fletcher Building, 1300 Smiles, Pete, RXP Services, Swick Mining Services. So you've got 2 more days to get on those stocks for dividends. And that's it for March. It doesn't look like there's anything for April. It looks like it's just March and that's it. So those are the last remaining positions you can get into for those. We won't cover the ASX, we won't cover the individual dividends, or earnings per share for each of those stocks. That's something that you can look at, but I would suggest going to morningstar.com.au or if you just type in upcoming dividends on the ASX or ASX upcoming dividends. Go to Morningstar. That will give you a complete list, as it is here, indexed, of the upcoming stocks. They're available whose stocks are eligible for dividends. So go through each. I suggest go through each of these stocks and see which one's best for you. They will all have different earnings per share, which means EPS stands for earnings per share, which means for every stock that you own, you'll get a certain dollar figure, so you might get $5 per share or 5 cents per share, depending on how valuable, depending on how valuable the company, how profitable it is, that sort of thing, and how much they've set aside, how much profit or revenue they've set aside for dividend shares or to pay shareholders dividends. So go to asx.com.au. So that's this site, or I just put in ASX 20 or just ASX, and just go to the asx.com.au website. So that's it, and just put in the company code of the stock you're looking for. So I don't know, say I'll put in BLK for Blackham Resources. And then once you're in there, say go to, you'll find that it'll be listed here. It'll show you, it'll tell you the dividends, but that you'll be able to see. But this currently doesn't have dividends that they're giving out, but you'll see that listed there if it's coming up. So, and you can see the dividends here. So that will be listed in this area. So I guess for a little bit of reporting on ourselves, we did buy into Blackham Resources at a low point. So we're kind of happy about that. We should profit well out of that. We are sort of debating as to whether we'll hold that position for longer than just a short period of time. We may play that a little bit longer and stretch out the profits a bit more. But I think the way the market is sluggish, I think we're going to hold it and just try to hold it for a short period of time and get out as soon as we can. The market's, I think the market's way too slow at this point to expect there to be any kind of possibility of stretching it out for more profit, because the market's too slow and it's going downwards. So not a good time. Horizon Oil, we did have to sell that at a loss. It just kept falling, and it wasn't worth holding in the long term. With Commonwealth Bank pulling out, it was a major shareholder, so I don't think that was going to go up anytime soon. So it was better to cut our losses and then reinvest what we've got, or at least find a position, or at least hold the money until so far that we can see that the coronavirus will subside, and then we can put it in before it, just kind of around the time it does. Hopefully we can profit from the increase in, from the falling boom that will happen, because it will happen after this. So there will be a boom. I think we'll leave it at that for today. I don't think we'll go into much more detail about the penny shares or other shares in general. Actually, what I might do is just take a quick look at the ASX 20 for you guys who've got your blue chip stocks, and just see, what went up, what went down. So if I can find it, because there is a particular site I do like getting it from. If I remember, it's Market Index. I think it's Market Index. That's the one I look at. I like the way they have it laid out here. So yep, down, opened at 3,104. And that was its height. Didn't go above the opening price and fell right down to 2008.20. So as you can see, it's very close to the. If you see my mouse, very close to the 52-week low. And 1 year return down 17.79%. Movement 9.16% down. 284.4 cents, 40 cents down. And these are the 20 stocks, top 20 Australian stocks. You can see they all fell except Telstra. Telstra went up, and that's probably due to the people making phone calls and contacting everybody or using the internet because of the current virus. So, wow, 19 out of 20 stocks down, only one up, and that one, Telstra, went up 6 cents. Only 1.81%. So even it went up, not by much. So everything is falling right now. So not a good time if you own stock. Great time if you're looking to buy into stock and hopefully profit off the expected economic boom in activity after this recession finishes. So okay, we'll leave it at that. That's it for the Alkandros Capital Management podcast, maybe for this week. If there's another one, we'll let you know. This is Konstantin Alkandros signing out. Thanks for listening.